Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a look at the action in today's session and how the week unfolded. Plus, we will wrap up with a look at the week ahead because we've got more earnings reports to come next week, Ed. But we did see a continuation of the market pullback this week.
Yeah, a little bit of a mixed action on Friday, but definitely a pullback for the week. Definitely want to discuss that, but we'll look at Dexcom and Exxon, which both moved into buy zones today, and also look at some of the wild action in Aehr Test Systems over the past few months.
Okay, perfect. We'll get to all that, but first let's take a look at the major indexes. So we did finish mixed, as you said, on Friday, Ed. The NASDAQ down 0.6%. On the upside, though, we did have the S&P 500 up 0.2%, the Dow up 0.5%, and the Russell 2000 up 0.3%. So tech lagging here today. And even though we did see further weakness in the NASDAQ, it still seems like the IBD assessment is that this is normal action.
Yeah, this is fairly normal and so far healthy. I mean, we've pulled back to around the 21-day line on most of the indexes. Didn't even get there on the NASDAQ or the S&P, but got close. So just taking off some of the gains we've seen over the last several weeks. And so this is in there. This is a shakeout. This is right now. This is the kind of thing. The reason, how does it shake people up? Because it starts making people a little nervous. I mean, it's and we'll have to see. I mean, it's like, okay, just because it looks normal doesn't mean it'll continue to be normal. A lot of things going on next week, like inflation report and more, that could change the dynamic. But right now, it looks pretty healthy.
That it does. Let's also take a look at the S&P.
You're on mute.
Am I still on mute?
Yep.
Let's take a look at the S&P 500 here because we did almost see the S&P touching the 21-day and bounce a little bit off of that level. Maybe not like a conviction bounce, but if we continue to see upward movement on Monday, I mean, in the context of uptrends where you do get pullbacks to the 21-day line in a power trend, I mean, those are opportunities to add exposure.
Yeah, I mean, on Monday, maybe it'd be a little bit cautious because we have the CPI the following day. But yeah, that idea for sure. And it, as you say, it's come down here and it's tested support not only at the 21-day line, but at the December highs. It's actually slightly below those levels. I think you'd be more concerned if the S&P came down sort of like to the 50-day line, the 200-day line, and the NASDAQ hitting the 200-day line. Those would be concerns, especially if it did it really quickly. But for now, I think, yeah, if this thing turns around, there's the good news is there's a lot of stocks that are setting up as a result of this. A lot of handles are being formed. Earlier in the week, it's like, yeah, there were some handles formed, but they were really shallow. Now you're seeing some more decisive handles. And so, yeah, this could be really positive and just have to wait and see.
Okay. And let's also take a look at the Dow. It's still holding in a range here, Ed. I guess the question is, are we going to see further deterioration in what's been leading in 2023 so far, which is your technology, the beaten down, the more speculative risk on, and back into some of these industrial plays? Or how should we be thinking about Dow versus NASDAQ at this time, because this is the laggard area of the market now, even though it is still holding up all in all.
It's the laggard in this rally this week. It did better than the other indexes. So yeah, that is an issue. I mean, and you don't know varying degrees, like maybe some of the names got really hit hard in the Dow. That's over, happened a couple of weeks ago. Maybe we shift from speculative growth to more traditional, growth. There's a lot of sectors that are doing well, and some sectors like this is not a bad pattern. If you had a stock that looked like this, it's not that bad, really. I mean, there's some aspects of it that don't look so great, but generally, so a lot of sectors that are doing well. So you should be paying attention to a lot of things, not just say I'm going growth, growth, growth. You don't know what's going to lead, and you want to have some diversity. There is definitely some names like energy names that are doing better this week and can provide maybe some counterbalance.
Such a great point, and we will get to a look at that soon. First, just here's a look at small caps. So we do have the Russell 2000 reversing off of the 21-day line today, so it'll be interesting to see if we can continue to get a rebound next week. But Tuesday, like you said, we got to be paying close attention to the CPI numbers, because in the past that has created just a little bit of market volatility, wouldn't you say, Ed?
A little bit, and there's a lot of economic data next week, so we constantly seem to be in a turning point. It feels like every week is a turning point, and so definitely have to be paying attention,
Yeah.
staying engaged.
Well, I guess what it really means, Ed, if we do continue to see the market rally strengthen again, is that we're climbing a wall of worry. If they're, oh well, we gotta watch out for this report or that Fed speech or this and that, and we ultimately continue to shake the news off, maybe not on a daily basis, but ultimately in the trend. I guess that would be the definition of climbing a wall of worry in my mind.
Yeah, I mean, if everybody's happy about the economy, about the stock market, about an individual stock, if everybody's in the stock, who's left to buy? Oh, yeah.
Right,
So
that complacency.
it's a good thing to have some worry out there.
Yeah. All right. Let's take a look at the 10-year yield year TNX, see how that shaped up this week. We did see that picking up. So, as we've been saying, less of a direct inverse correlation than what we saw for much of last year between stocks and yields. But we did see an uptick here today, and stocks mostly shrugging that off, or does that explain maybe the NASDAQ's weakness in particular today?
Probably some of the NASDAQ's weakness. And while there's less of a direct link, it's still, I mean, the 10-year Treasury yield bottomed on February 2nd, which is where the stock market rally has hit its high point so far. So that's 41 basis points since that time. Not very long. Yeah, breaking that trend line decisively above the 50-day line. This is a buy point kind of thing for that. We'll just see how it goes. But yeah, it is weighing on it. And obviously with the dollar as well, which is, obviously linked to a great extent to the Treasury. That bottomed a day earlier, but still the trend is the dollar's been getting higher. That's a weight on the major indexes and so on.
Which is definitely why it's a good idea to keep tabs every day and keep track of those the give and take in the market and what we're seeing, those different factors impacting the action. You mentioned energy stocks, so let's go to XLE. This looks like a strong early entry here. If you were looking at this for a potential position, we didn't quite see strong volume, but strong outperformance here today for the energy sector, while we saw the underlying commodity have a strong day.
Strong day, strong week after a really tough week the prior week. And so, I mean, energy prices rose. There's not really much else you can say. There's reasons for it. Maybe China demand, maybe Russia, threatening to cut supply. But yeah, so this is bouncing back. Definitely the leader this week.
And we also want to take a look at the metals and mining stocks. Here's XME reversing slightly higher today, but really where we saw some notable outperformance was to kick off the year, I would say. But even in Q4, maybe some sneaky outperformance, but still looking to get back on its feet. With this pullback, though, maybe we could see new buying opportunities brewing in this space, Ed. What do you think?
Yeah, I mean, you can sort of look at that. It's got this large cup with handle, but you can also sort of see sort of a bottoming base around 55. A lot of stocks look like that, just to be clear. A lot of things had that sort of formulation. Yeah, if we see a little bit of strength, if we feel like we're going to have a soft landing, you could easily see copper and the base metals rebound and go on another run.
All right. Well, not as much of a fun end to the week for travel-related stocks. Here's a look at the Jets ETF, which tracks airlines, down 2.2% on Friday for the week, taking a hit of more than 5%. So, would you say that this is expected, given such a strong move to kick off the year, or is it an expectation breaker to see it break how it did? We saw a disappointing results and reaction from Expedia, so that weighing on the sector today.
Yeah, I wouldn't call it an expectation breaker so much because, yeah, they had this sort of pattern here, and it was a 3 weeks tight, but it was sort of wedgy at the same time, and some of the handles weren't that great. This was more of a shakeout. Now maybe you'll have a new handle. Yeah, again, if it turns around. I mean, this is part of the issue. Is like, I mean, maybe we keep on heading lower and really break through. And that'll be the question for sectors like this and for the market in general.
Absolutely. Okay, let's see how chips fared this week. Here's the SMH ETF, down 1.7% on Friday. So an outsized loss there, down almost 2% for the week in comparison. QQQ was down 2.1% this week, but SMH having 1, 2, 3, 4, 5 up weeks in a row. So its first down week after a 5 week run, right around a previous level of resistance last August, seems pretty reasonable to me.
Pretty reasonable. Looks almost like an inside week. Yeah, sort of due for this one looks pretty normal. Not too much to worry about.
Okay. And if chip stocks have been leading and running, well, we don't want to be buying extended stocks. So if we can even see them pull in a little bit more, I don't know, be careful what I wish for, but they could maybe even pull in a little bit more or pause a little bit more. Maybe that would even be better and have the moving averages catch up instead of seeing the group fading further to the moving averages. So we'll see if that can play out next week. A couple more quick ones to look at, and that would be the IGV ETF. Here's the software sector, down 1.4% on Friday, down 1.6% for the week, but also a strong start to the year. So a little bit of a pause here. And let's take a look at ARKK, harder hit. Down almost 9% for the week. But of course, these stocks have been running up the strongest off of the bottom. So more volatility here in this group.
That's where you always have to worry about the risk. These have such high flyers, but off the bottom, they're going to fall more. And it's the fact that ARK fell this much with Tesla still rising. I know Tesla didn't have a good Friday, but it was still up for the week. The fact that this was down like this so much, but yeah, that's what you get, the big outperformance on both sides.
Mm-hmm. So something to note there. Okay, let's take a look at some individual names, starting with Dexcom. Has had a strong reaction to earnings and a strong close here today as well, up 10%. Strong volume behind the move. Exceptionally strong bottom line growth. We had sales up 17%. So this was an early entry. You could draw a trend line from those highs. You could even go a little tighter as well. There's lots of lines, Ed, it's always fun when you can see lots of different reasons to get into. It's not clearing the highs from earlier in the year as well to kick off the year. Looking at an intraday chart, a little volatility to kick off the day. It looks like it settled down a little bit, but all in all, closing near its highs of the day. So this is pretty bullish here.
Yeah, pretty bullish action. There's always concern, will it follow up or will it hold those gains?
Exactly.
Depends
like
on the
last
market.
quarter, it didn't.
It didn't, and it didn't do it when it had a breakout in early December when they got some good news from the FDA, and that didn't last. So that's to go with a lot of stocks. So it wouldn't be the worst thing if it formed a handle here, paused around and gave another opportunity because did go up a ways today, but really nice action. This was, I think, the top performer in the S&P 500 today, and it turned around, and just have to see if that continues.
All right, one to watch. And let's take a look at oil giant Exxon Mobil with a very strong day here today, up over 4%. Strong volume behind the move. Now, this is a stock in the oil and gas space that has held up quite well versus a lot of other names in the group.
Yeah, a lot of others, and some of them may end up having bigger runs if oil goes higher. So don't get me wrong, but a lot of them sold off pretty hard, had damage charts. This one, yeah, it came back in, but it didn't really. There's that fake trade day or that weird day, but other than that, it basically held the 50-day, 10-week line, despite all the weakness in oil prices and natural gas and gasoline, and it really came on this week. So this is a huge component of XME. That's another way to. Another way to play XLE, and that's a good way to play it as well. But and it's another way to another way to counterbalance the action and other things, especially growth stocks.
Yeah, I guess the question would be, is this something that you would want to buy into strength? I mean, it's tricky though, because when it was looking a little weaker, well, the whole sector was looking weaker, and there were concerns about rotation out of this area, which was such a leader in 2022, and into the technology area. And also, I mean, this is our 18-month line here. this has been a stock and an area that has been running. So at this point, it would be great if it can continue to move higher and provide some of that counterbalance. But those are just some things for investors to consider at this point.
There's a lot of reasons. It's energy stocks are hard. There's a lot of those factors out there. It's something to consider as part of your portfolio, but yeah, probably not something you want to make the centerpiece of your holdings.
Well said. All right, and now AEHR. What about this? Should this be the centerpiece of our portfolio? Maybe the opposite personality to Exxon. This one is a wild bucking bronco, I think is what I've called it previously. And today, down almost 8%. It's been on such a huge run, though, Ed. So seems like it could be due for a new base at this point.
It could be. I mean, it fell through the 21-day line for the first time in a while, but it's given up now a lot of the gains from, depending on where you bought it. It's hard to see. It didn't have a great entry because it was so wild. It had, all sorts of things. Yeah, you could buy it there, but that's after gapping up so much on earnings. I mean, it doesn't look so much now, but it was like 30%. It was a huge gain that day. So let's just look back all the way back to, say, September, August. I mean, I'd say one of the first times you could buy it is when it sort of early October, when it's sort of like breaking a trend line, or even before that, when it first went through the 50-day line. Well, when it first went through the 50-day line, looks great. Hey, early entry. Oops, then it flops. Okay, then it comes back down. Okay, then you have this move, and you make a nice move from, like 1780 to 23, but it comes right back down, wiping out all those gains. Okay, then it bounces back, so far, and it goes all the way up to 28 or so, but then it comes all the way back down again, even lower this time. So it's just, huge gains, but then wiping out the gains within a couple of days, couple of weeks, or a few weeks is completely in character with this one. Now, this one, right. I love a lot of the things about it, and this one may go on another run, but you have to know this is the personality. And you have to know what you're going to deal with it. If you get a 50% gain and then say, well, what are you going to do? What if it breaks a 10-day line? What if it breaks a 21-day line? It's not saying that there's a right answer, because maybe this is the time it really takes off and goes on a powerful 500% run, or maybe it rolls over and goes down to the 200-day line. I mean, it's
those are all great points, because it seems like the personality that it's had so far is built more for traders who are more nimble, who maybe have a shorter time frame, who are a little bit more aggressive, can get in and out a lot more quickly. This isn't really my core position trade that I'm going to ride for a couple of months easily.
Yeah, it's not easily. I mean, if you close your eyes, maybe in a year this will work out great, and you'll say, oh, I was so smart, everybody else was checking. But it's like, I mean, there's huge swings that have happened up and down, and just something to watch out for. And you have to be careful with these names. But it is a bucking bronco.
Well, maybe can it be a tame? Can we tame the bull or the bronco here? Can we saddle train it, or whatever you want to call it? And maybe this next base that it forms, if it does go on to form a base, we would want to see improvement in that character, right? Can it settle down? Can it really tighten up? And then I feel like that could make it potentially pretty interesting. So we'll be waiting and watching. All right, Ed. Well, as we wrap up the week and look to kick off another one here in just a couple of days, what should we be thinking about for the week ahead? Clearly, you already mentioned CPI coming up on Tuesday, and we also have a lot more earnings reports coming out. I know even at the front of the week. So would you say it's more of a front-loaded earnings week, or is there just a lot coming throughout the week?
A lot coming. I sort of stopped after Monday, Tuesday, because there were so many. I was looking at that. It's like, oh boy. There's still a lot, and they really influences sectors, individual stocks. It's not the mega caps anymore, but still really important to be following that. And I think just general that you should be building up your watch list, and thinking about getting your game plan ready, but also that game plan has to have defense too. You have to be ready. Let's say this pullback doesn't, to stop, and it start coming down, and not just the overall market, but individual stocks. Some individual stocks may start showing real real pressure, you have to respond to that. This is a good time to not only be preparing for potential buys, but also thinking, okay, let me reevaluate, how will I exit? What am I going to do if my stock or the market does this, and draw down your exposure? And so, you can do this before the Super Bowl and enjoy that, and then be ready for your own game on Monday.
Exactly. Yeah. Game time on Sunday and game time come Monday as well. I like that. All right, everyone. Thanks so much for tuning in. We'll be back with more on Monday morning for IBD Live, our daily morning live stream. And we hope to see you there, investors.com/IBD Live for all the details on that. Have a great weekend, everyone. Enjoy the Super Bowl, the game, the food, the commercials. Take your pick. 1, 2, or all 3. Enjoy your weekend, and we'll see you back here on Monday.